Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Kickstart video for January 15, 2024, where I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and sterling versus US dollar, to kickstart your New York or US trading session. So let's get started. Looking at the euro versus US dollar and trading yesterday, I did a end-of-day video which outlined that the euro versus US dollar has been confined in a trading range up, pretty much encompassing this type of period right here. Yes, there was a move below it here, but the price has traded most of the time period over this, I don't know, 1, 4, 5, 6, 7, 8, or 9 days in this a very narrow trading range between 1.09, let's call it 10, and 1.09, let's call it 1.100. So that's about 90 pips. That's not a big range. We did have the double high last week at this point. This was the Friday employment day, and this was the high price from last week, which was at near the same level right there. And in trading yesterday, we closed right in between the 100 and 200 hour moving averages, which is in between these two extremes right here. So something had to give. And early in the Asian session, we saw the give to the downside here. So the sellers started to take control. And I don't know what happened here, but for whatever reason, the euro versus US dollar moved sharply to the downside right there. Maybe I should know, but what we did see was a selling pressure, and it could have been off the technicals. Who knows? But technically speaking, this was giving us a clue. We broke below broke away from the 100 and 200 hour moving average, and the sellers started to take control. That continued into the European session, where we fell below the low price from last week's trading here. And we saw increased momentum, and that the momentum has continued down to and through the low price through here and this swing area as well, not to mention the 61.8% retracement of what? Well, let's go to the 4-hour chart to show you what that looks like. And if we go to the 4-hour chart, we look at this yellow area. You can see this yellow area was defined not just more recently, but going back in time. You can go all the way back to this period right through here in November of 2023, where we started to have these highs and lows through here, and we continued it through here and here and here before moving to the upside. Came back down to it here and then used it as resistance here. We then moved above it and used it as support here to move to the upside, and then returned to it here a few weeks ago before breaking to the downside. So you can see the importance of this level from a technical perspective, also defined by the 61.8 of this move from this low to this high right here. So getting below that, all those levels is increasing the bearish bias on the downside. What's our next key target? Well, this 200-day moving average. The last time the price traded below the 200-day moving average was this day going back to December, probably around December 10th or thereabouts. So that's going to be our next target at 1.08462. Resistance now, or risk now for sellers looking for more downside, would probably be the 108.94 level. That's the high of this swing area. We did move a little bit above it in the current 4-hour chart, but then quickly came down. Let's call it 109 maybe. Nice round number. And if the price can stay below that level, that would be more bearish. Closer resistance, we might look at the 61.8% retracement level as a level of importance. That's just 4 pips away, but you don't want to see momentum above the 61.8% retracement. Maybe that's the idea for this currency pair. So keep below that level, and the bears remain more in control. But certainly, the sellers are in control in the euro versus US dollar here today. We'll see if that continues. Thrown into this idea of the dollar going stronger was the New York Manufacturing Index, which plunged to 43.7. But despite the plunge, the markets aren't really reacting like it's Armageddon, or that the spigot was suddenly turned off in all of manufacturing. Maybe it's a survey thing. I don't know. But U.S. yields are still higher, and they're off their lows after the report. In fact, the 10-year is now up 6.7 basis points. It was down about 3 basis points after the report. So it's moving back to the upside, which is a bit weird. And also, well, the stocks are moving back to the downside here. So we'll see how it all pans out. But, it wouldn't necessarily suggest a higher dollar, lower euro. But, anyway, it is what it is. But let's take a look at the dollar versus yen next. And I'm going to put it on the 4-hour chart to start things off here. And what we see off of this is that we are making new highs going back to this area right through here, which is, again, around the December 10th or so time period. We can go back to November through here where we had different swing lows. It got a little messy there, and then you started to use this level again as support and resistance through here, and then return to it here before moving to the downside. So, this is a area between 146.53 to 65 where I'm paying attention to. We're currently trading in between those levels right here after breaking to the upside. Next target on the top side of further momentum comes in at the 147.14 or 15 level. That level corresponds with this low. But as you can see, through here, it wasn't exactly at all a support or resistance level through here. So a little bit, it's not the best target. What is a better target is up here against the 100-day moving average, 61.8% retracement, 147.45, and it seems like that may be a possibility to go retest that moving average, test that retracement level. Markets tend to be attracted to such levels. What we don't want to see off of this 4-hour chart is we start to take out things like the 50% retracement or this swing area through here. That would probably not be a good idea for the buyers to see the price move back below 50% retracement of this move down from this high right here to this low right here. So be aware of that. That's probably a risk level now. So what we do know, is that also fundamentally is that the wage data last week in Japan was less than expectations, and that was sort of the linchpin for the idea that the Bank of Japan would start to get off their zero interest rate policy idea and start to normalize rates a little bit. It doesn't seem like that is on the agenda right now. So that could lead to dollar moving higher, the dollar yen moving higher, the yen moving lower as a result. Finally, let's take a look at the sterling versus US dollar and wrap this thing up. Like the euro versus US dollar, the pair was trading in between its 100 and 200 hour moving average yesterday near the close. And I said, well, although I don't like any of this through here, the markets are very choppy in this currency pair. If the price were to break below the moving averages, it would tilt the bias more to the downside. We need to get below 38.2% retracement of this move to the upside as well. And we did both of those things, and we could see the momentum to the downside. It's pushing the price down toward the 61.8% retracement. This area right through here is a nice little swing area that is of importance. You can see that there is a number of different points through here, here, before moving to the upside. Came back to it. Oops, missed it here, and here, and here, and here, and here. So this area is a pretty good support level, and you can see that the price got down toward that level and then found support buyers, and we did push back to the upside, but we are coming back to the downside. We did get back above the 50% retracement, which is, I just said that I don't want to see that happen in the dollar versus yen. I don't want to see it in the sterling versus US dollar, but it did. But in the price rotated back to the downside. Watch out 50% retracement as resistance. However, going forward, if it does move back above that level, that maybe the dollar starts to move back to the downside. If we stay below that level, then we'll look toward the 61.8, look toward this swing area down to 126.02. So there you have it, a more detailed look at the three of those major currency pairs to kickstart your day. There's a lot going on, and things are moving and changing. So I think it's important. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.